So let's get one more market opinion in now. Gautam Chhaochharia of UBS Securities joins in on what has been a blockbuster day for our markets. Hi Gautam, afternoon. In the interactions that you've had, what are you picking up? Does this look like some genuine basket buying that we're seeing by FIIs, or is it a speculative move ahead of the 13th of May?
Good afternoon. I'm not able to comment on what happened today in terms of speculation or basket buying, but in general, so what we have been telling investors is purely from what's being priced in, how investors are positioned. So one is levels. So 16,900 is the level which we think is the minimum which one should look at if one believes in a positive election outcome. And in our view, if we have a strong election outcome, then the upside could be as much as 7,800. So in that context, after the correction over the last few days, the risk reward was getting better. Secondly, in terms of investor positioning, so what we have analyzed based on both shareholding data, which came out for March quarter, as well as our investor interaction. So while investors have largely moved to overweight positions on India, the move away from defenses to cyclicals, that still seems mild and not significant. So investors have moved towards that, but not in a big way. And that's supported by multiple factors. You look at defenses versus cyclical P multiples, as well as the shareholding increase, delta, etc. So that also kind of indicates, and it is in line with what we get talking to investors globally also, that they are aware, or the fact that in the opinion polls have gone wrong, that does remain an overhang for them. So they are trying to position partially, not completely, for the big event. So that's the backdrop of how investors are positioned right now.
So Gautam, good afternoon. Help us understand this, and since this program is being watched by a lot of retail investors, would you still advise them to say buy into stocks like ICICI Bank, Larsen & Toubro, Reliance, the leaders of this market, despite the kind of rally that we have seen?
So again, as I talked about the Nifty level itself, so our fair valuation number for Nifty for this year remains 6,900, which is based on a mild economic recovery and a possibility of a good election outcome. Markets do become irrational in the short term, and that's where our 7,800 number came from, where markets go beyond the fair valuation range to upper end of range based on recent history. And similar thing applies for these stocks also. So these stocks have run up a lot. They have re-rated. They are in a way building in some kind of recovery over the next few quarters from what we are seeing now. But they're not pricing in euphoria. They're not at irrational levels. So it depends on the risk appetite of the retail investor and the time horizon he's looking at. So if you're looking at 3, 6 months, 12 months, then obviously fundamentals-based upside will be limited. But markets can get irrational if you see a strong election outcome next week.
Anuj asked you about some of the frontliners, Gautam, but what's your view on what are the key mid-cap stocks to look at? Because history has taught us that the post-election phase for the first 1 or 2 years generally gives a higher amount of returns in the mid-caps and the small caps. So what are the stocks that you would look at outside the index, if at all?
Yeah, so that's also very typical that especially when you're talking about the bottom of the economic cycle also, that these stocks start doing well when sentiment starts turning positive. And we've already seen some evidence of that over the last few months, where mid-caps have done well. In our coverage universe on which we can talk, so we still remain constructive on a lot of the names, which includes in the consumer durable space, Bajaj Electricals, even Chhaochharia Ceramics. But within the cyclical space, the name where we are most constructive on includes Voltas, Blue Star, and Carborundum.
That's interesting. Gautam, would you also include maybe some pharma and IT as a hedge for your portfolio, or would you at this point in time rather be completely with some of these leaders of the market?
Depending on the risk appetite of the investor, but from our perspective, we are still overweight IT on a portfolio basis. Pharma, we are neutral because pharma X currency, the other big driver seems to be priced in. While in IT services, the US recovery still continues, and in terms of valuation, there still remains upside based on past cyclical peaks we have seen for the sector. So IT services could be one way to hedge. But within that, our preferred pick is TCF. We recently downgraded Infosys to a sell based on company-specific factors.
So let me try and decode the two numbers that you've given us. 6,900 as the fair value for the Nifty, and if there is an exuberant move on the upside, then you expect the Nifty to even hit 7,800. So are you trying to say that post the election outcome, if you have positions, then at any given rally you should look to sell into the market?
It's not a simple answer, frankly, there. In terms of exuberance, so what does exuberance mean? You start expecting a lot more sharper recovery and much higher growth numbers, etc. So if we start seeing government action, which kind of helps one believe in that over the next 3 to 6 months, then markets may not come off from even those levels. So that depends on what happens post the election event itself, what actually the new government comes and does.
Okay. What is the market factoring in now in terms of a number? I mean, there's so many rumors doing the rounds, you know, of some exit polls, perhaps showcasing 260, 270 as well. So what is the market going into the event with in terms of the BJP number and the NDA number?
That's very difficult to say, frankly. But again, our discussion with investors indicate that most of them are building in a high likelihood of NDA forming a government. The numbers can vary from each individual investor we talk to.
Gautam, you spoke about 7,800, you know, in terms of exuberance for the market and, you know, overshooting the fair value of the market. But let's talk about the downside as well. What's the downside risk to this market in case the market doesn't get what it wants or market gets a bit of a shock?
So similarly, the downside is between 5,800 to 6,100 levels.
That would be if there's a hung parliament, or if you know.
Yeah, that's more in a hung parliament. So our thesis is that if the number is somewhere in between the range of NDA being closer to forming government, or the number is not in between a range of closer to majority or a hung parliament, then markets may not react much. So if the number is, say, is 230, 240 or whatever, or 220. Where it creates uncertainty as to what will happen. The markets cannot react much and wait for actual government formation. But yes, if we have an uncertain environment continue, then markets can come off sharply.
Okay. And what's the retail mood looking like? Just one final word from your end. I mean, have you seen any kind of improvement in terms of retail participation? Has there been any pickup in inquiries, etc.?
So we won't know that in terms of retail inquiries and all that. But yeah, from
the interactions that you've had?
So again, doesn't look like, from whatever little we hear anecdotally, doesn't look like yet.
All right. Thanks so much, Gautam, for joining us and giving us that view. So that's a fairly bullish view on the markets. UBS saying that the Nifty could even hit levels of 7,800 if there is extreme exuberance post the favorable outcome, of course, of the election verdict on the 16th. Still holding on.